Hello friends, this is Dr. Amarjeet Kaur, Professor of Accounting and Business Communication at the Department of Management, Gurugram University, Gurugram. It's my privilege that I am here with you to talk about Indian financial system, in fact financial system in a broader way. So it's a very important topic which I am going to cover today, because understanding of financial system and its pillars, be it financial markets, instruments, etc., is very important, right? So it's a very important topic for any subject. In fact, either you are an engineer or a graduate in commerce or a management or even arts, understanding how economy works, how financial system within the economy works is essential, right? Only then you will be able to understand business per se, because at the end of the day, even scientist is working in a business, or an artisan is working in a business, or a cook is also working in a business. So irrespective of your specialty, irrespective of your area of studies, you are going to be working in the economy only, right? So it's important to understand how economic system is linked to financial system and how it works perfectly. So friends, an economic system, which we generally call, is a broad spectrum of activities, economic activities. It varies from country to country. Of course, every country has its own system, but broadly there are many agents in an economy, be it household, be it producers, government, consumers, regulatory body. There are so many agents who are working in any economic system, right? And these agents are doing certain activities, they are undertaking certain economic activities like production, exchange of goods and services, exchange of knowledge, exchange of art and culture, consumption, right? For the purpose of sustaining themselves. Everybody is working to sustain themselves, right? So these economic activities are resulting into what? They are resulting into mobilization, allocation and utilization of and funds. So they are generating funds, and they are also ensuring that funds are generated and mobilized. For example, if I am working in a university, I am getting my salary, right? So this is an economic activity that I am undertaking. So the salary which I get, I buy clothes, I buy vegetables, I may buy a phone, I may buy car, I may buy anything on daily basis or long term use base. So what is happening? The funds are mobilized from the government of Haryana. I get salary, then those funds goes to different people, manufacturer of car or manufacturer of toothpaste, like that, or a vendor, a farmer. So they are getting, so this is how the funds are mobilized and allocated to different activities. So they are utilized. So and ultimately the funds are generated for so many people, not only for me. This is one. So what is the source of that fund? And everything is interconnected. So on salary we pay tax. Tax goes to the government of Haryana, government of India. Different types of taxes goes to different governments, state and central. Then those funds are available with the government, and the government pays salaries from those funds. There are so many more sources of funds as well, but basically these are the economic activities where we are generating funds, we are mobilizing them, we are mobilizing resources, we are allocating resources, that these many people would be working in X department, or for X branch or X ministry. Allocation of resources in human terms, in terms of capital, every way. So these all are a very broad spectrum of economic activity, and at any particular point of time, these all units which I am talking, right, they are not going to have equal amount or exactly the same amount of funds they need. Some of the units, some of the activities, some of the verticals would have, in any economy, would have more funds or surplus of funds, others may have shortage of funds, right, because of these activities. That's why there's a need for, taking loan, there's a need for borrowing, etc., etc. So in the absence of any flow of funds between these two type of units, the units which have surplus of funds and the units which are having deficit of funds, what will happen? The both will have loss. If I have surplus of funds, those excess funds are underutilized, they are just lying without utilization. Another, let's say another business, somebody is into a business but it has many potential opportunities, but is having shortage of funds. So that unit is having deficit of funds, right? So there is a deficiency in one particular example, in one unit of business, another unit have a surplus amount. So unless there is something which is ensuring the flow of funds between these two set of units, the the one which have shortage or deficit, and another one where we have surplus, so that both the units would have loss, and the economy will not grow, right? And that is where there is a need for financial system. So the need for financial system comes in because of these economic activities, because of the activities causing surplus in certain units, certain areas, certain sectors, and certain economic activities causing deficit of funds in another set of units or verticals or sectors, right? So that is where the need for financial system is there. Now, what is financial system? So financial system, a part of the economic system which facilitates the flow of funds between surplus and deficit units, is known as financial system. Thus, a financial system comprises of various financial institutions, markets, instruments, services and regulatory bodies, and help the flow of funds. So, as I gave you an understanding of the economic activities, that there are so many households, there are so many production units, there are so many consumers, there are so many bodies of the government or private, there are so many regulatory, they all are actually economic system. Then we have production, consumption, these are the economic activities taking place, right? So in that economic system, so we have one segment of the economic system which is known as financial system. So financial system is the part of economic system. It means economic system is broader or wider. So this is what is facilitating the flow of funds between surplus sector and deficit sector, right, or the units. So that is what is known as financial system. So a system connecting surplus units and deficit units, right? So it comprises of financial institution, financial markets, instruments like checks, bonds, debenture, equities, services. So many types of financial services, be it issuing a check, be it honoring a check or a credit card, or so many more services. Regulatory bodies, may it RBI or SEBI or any other regulatory body, they all help actually flow of funds. The ultimate task what they are doing is actually helping flow of funds from the surplus sector or unit to the deficit unit. That is the ultimate. If I give you one bottom line, the role or the major function of a financial system. Now, a financial system, it actually helps the growth of modern economies, and it increases the standard of living among its citizens, making the funds available. Even for our personal consumption, if I want to buy a car, I have shortage of money, I may go to a bank and seek loan, an auto loan, and I will be able to improve my standard of living. Same way, if you are looking for buying an even refrigerator, you can approach to a bank, can seek loan. Of course, basis on your credibility, the loan is extended, but that is how the modern economies are growing. Because in the initial years, we know initial years of human development, it was barter system, and then gradually we have system of the money came in, and so many more things gradually evolved. Transportation cost, movement of people, everything. So we all understand how the economies have evolved over centuries. So the financial system, coming to the point, it helps the growth of modern economies, right, and help us individuals or companies or governments even for that matter to improve the standard of living, right. So, after this discussion, the next thing I want to discuss about is the functions of financial system. What are the functions of financial system? A financial system really helps in or really performs so many important or so many key functions. I am going to discuss them one by one. The first important function of financial system is to mobilize savings. Number 2 is to provide liquidity. Number 3 is to facilitate exchange. Number 4 is to risk management, and risk management for investor and risk management for borrower I will take separately. Number 5 is to regulate markets. Number 6 is to capital formation. Number 7 is price discovery. Number 8 is liquidity provision. Number 9, again I am repeating, risk management because from other perspective, and lastly lowering transaction cost. So, these are the functions of financial markets. Now, I will be explaining them one by one. So, the first function of financial system is to mobilize savings. Individuals would save, companies would save, government would save, any regulatory body would save, any NGO may save, right. Savings means after taking care of our consumptions, our spendings for a month, for a day, for a year, we would have some surplus money, right. People have saving account. The most common thing you can relate with is having saving accounts in India, right. That is basically, we keep on saving small amount. So, those savings are there with certain people, but those savings are to be utilized for the people who are having shortage of funds. So, bank is doing what? Bank by offering you the option to open a saving account or an recurring deposit account or a fixed deposit account. What is happening? The bank is collecting money from all those people, from all those companies through current account who have savings, who have some surplus of money after the consumption they intend to, or who are saving for a particular purpose, whatever, right. They are saving for their old age, they are saving for the child marriage or education, they are saving for travel, they are saving for whatever reason, or they just have the surplus, right. So, those savings are to be mobilized. The savings, if they are lying just at our home, imagine they are not going to be productive. That money is not going to be productive to make use or best use of the savings we have as individuals, as companies, as government or as country even. That is how the countries are lending loans to other countries, right. We all know our neighboring country is lending loans to so many small countries and is showing the muscles. So, without naming the country. So, that is how savings are mobilized through financial system. One of the example, there are so many more players in financial system. I just took the example of bank which you can relate so easily, but we have mutual funds, we have special purpose vehicles, we have loan credit rating agencies, we have which help the other companies to extend loan. Basis on that, the savings are mobilized from one sector to another. There are so many organizations like cooperative banks, which they come together and they save and then they extend loan to members itself, the members who are part of those cooperative bank or cooperative body. So, the first function, the foremost function is mobilizing savings from the surplus sector to the deficit sector, right. So, any financial institution would be involved, but that is how this first function is being performed by the financial system of any economy. Then the second is provide liquidity. Liquidity is being able to take care of your immediate liabilities. That's a very set format of understanding liquidity. Means having some funds in hand. That's the most layman's language, but generally for the purpose of business, liquidity means or individual means liquidity means that you have enough money in hand, enough funds in hand to take care of your obligation. The obligation could be for individual to pay fees for his or her son or daughter. It could be obligation could be to pay salaries to the employees or to pay salary to a house help even, right? For a businessman, the obligation could be to pay to suppliers, to pay salaries, to pay for rent, to pay for insurance, etc., etc. For everything we need funds, and that is what the liquidity means. We may have shortage of fund. The moment we go and seek, you know, loan or overdraft facility as a business, my liquidity goes up, right? I am able to take care of my immediate obligation by seeking funds from the sector which is having surplus, and that the medium, the intermediary for that could be simply issuing us commercial paper, or reaching out to a bank for an overdraft facility, or for an individual reaching out to a bank for a personal loan. These are the example. Even reaching out to a Lalaji or a Baniya, which we call generally in a small village where we seek small loans, even that is providing liquidity. The person who has surplus of funds is helping actually every individual in that particular small village. It used to be the case. Now the things have improved. We have inclusive economy in the people who are included in the financial system, the formal financial system. The things have changed a lot in our country. That's a matter of pride for us. But the system, if you understand the financial system, that is providing liquidity, means the people who have an obligation, they are able to comply to the obligation by having small borrowing or whatever the amount they need as borrowings from the surplus sector. This is the second function of financial system. The another function of financial system is to facilitate exchange. So, how does a financial system facilitate exchange? A financial system helps exchange of goods, services, by by means of providing services in the economy. So, exchange of money is happening, exchange of funds is happening, exchange of currency is happening. So, that is how the exchange has been facilitated between two countries, two people, two states. That is again a financial system comes into picture. Now, risk management I want to discuss from two different perspectives. One from borrowers perspective, another or the surplus sector, another from deficit sector. So, risk management from the people who are having surplus, even if they are going to extend loans, they are at high risk, right? Because they are the ultimately they have the risk of being able to collect their money or principal or the investment back. So, here we have underwriters who come and assure them. There are people who are actually assuring. There are institutions, there are government bodies who actually assure that yes, your money is safe, you will get back or you will pay it back. And to ensure that, we have regulatory bodies as well. To regulate markets, we have the financial system which comes in place, right? So, markets are regulated because a strong financial system. India takes pride in that our financial system is very strong. There were so many bubbles, there were so many recessions in other countries. There were difficult times and when there were financial crises in major economies, but we were hardly affected because we were able to have we had a very strong financial system, and our markets were not affected that badly, or it were hardly affected. So, the financial system helps in regulation of the markets as well. Okay. The another function, as I said, which financial financial system does is the capital has been formatted. So, the capital formation is so easy because capital formation you need exchange of money, right? The money goes from the surplus sector to the deficit sector and it gets utilized. Instead of saving being just lying there, the money gets utilized and some productive activity, be it production, be it services, extending services takes place. So if the production takes place, certainly the wealth is been formed, the capital is been formed, right? Then another function is that your price being discovered through financial system, especially if we talk about if we talk about the markets, which financial markets where the exchange of financial instruments take place, the money takes place, the price discovery it becomes easily through these financial system only. The person who has to extend loan or who has to buy, for example, stock, so it is possible because financial markets are there, which are the part of financial system, right? So price discovery for stock, for debenture, for special purpose vehicle, for so many more instruments is possible. The fixed, if I want to extend FD, I know that X bank has this much percentage of rate, the Y bank has this much of percentage of rate. How am I able to find out? Because we have a financial system, right? Though financial markets are playing role here, but financial system is at the core. And liquidity provisions, as I said, are only possible, those provisions for difficult times are only possible because the financial system exists, because financial markets are there, financial instruments are there, which are helping exchange of money. And the another point from the people who are investing in companies, liquidity provision for company, for example, they are investors in stock, in debentures, in bonds, etc., etc. For their risk management, the financial system is there, especially for stock, for example. So we are able to see the financial markets being working. That financial markets are the part of financial system, and that's the whole process, because the more effective, more more solid system a country would have, financial system, of course I am talking, the transaction cost goes gradually down. So the more effective financial system would have, lesser transaction cost means exchange, sale and purchase of stock, sale and or borrowing cost. We all know the credit cards have certain hidden costs. Certainly, per sale and purchase of stock and debenture there are costs. Even borrowing loans, there are processing costs. So these all would or are lower in those financial system or those economies, in fact, where financial systems are strong, because effective financial system would have a very effective financial market. The transaction cost would be lower, right? So these are the importance of or the key function of financial markets, financial systems, financial instruments, which are actually everything which comes under economic system, and we are discussing as a financial system as a part of economic system. So they all are actually different verticals of an economy, but we are focusing only on the financial system at this moment after talking the basics of economic system. The last thing I want to talk here is the pillar of financial system. So there are 5 important pillars of financial system. Number 1 is financial markets. Number 2 is financial institutions. Number 3, financial instruments. Number 4, financial services. And number 5 is regulatory bodies. Financial markets, financial institutions. So, and instruments, services and bodies together. Five things, these 5 pillars together make financial system, right? When I say financial system, helps movement of surplus funds or mobilize saving from surplus fund to the deficit sector, that is through financial markets. And financial markets have many financial institutions, be it bank or be it a non-banking financial institution, right? And they have many instruments with the help of which they are exchanging. If a check is a financial instrument, a bond is a check, financial instrument, a stock is a financial instrument, right? And then there are so many type of services which are provided by financial system. So that is also become a financial services are also, or they become one important pillar, And lastly, none of the four pillars like I talked, market, institution, instrument or services, can do well or perform better or fairly, especially if we do not have regulation. That's why we have regulatory bodies. So in total we have 5 pillars, because to make the whole financial system effective, right. So friends, I will stop here, time to wind up. And now in future sessions we will be talking about each of these pillars separately. Financial markets will be covered first in the future lectures, followed by financial institutions, financial instruments, financial services and regulatory bodies. So we will actually spend a quite good number of sessions to discuss this financial system in detail in future sessions. I wish to see you in future as well, and this is the time to wind up. Thank you very much.